Michael Burry, the hedge fund manager renowned for his prediction of the 2008 housing market crash, is sounding the alarm bells once again. This time, he warns that an even more severe financial crisis looms on the horizon, which will have a profound impact on future generations. In an interview with Business Insider, Burry foretells that the next crash will be worse than its predecessor, raising concerns for investors and the economy alike. As the saying goes, when it rains, it pours, meaning that events tend to happen in clusters, both good and bad. Since the start of 2022, the stock market and the economy at large have been experiencing a downturn, heightening fears of an impending financial catastrophe. This video delves into Burry's prescient insights that foreshadowed the 2008 housing market crash, the reasons behind his conviction that an even more significant crisis is on the horizon, and how you can protect yourself and your family from falling victim to potential financial risks. The 2008 financial crisis, also referred to as the Great Recession, has left a lasting impression on the global economy, and Burry's warning of another crash could serve as a call to action for all individuals to safeguard themselves from the potential fallout. The occurrence we are all aware of served as a wake-up call that life is not always a bed of roses, and it is essential to prepare for unforeseen circumstances. As stated by Robert Kiyosaki, a prominent American investor, a financial crisis could be a terrible experience for the average person, but it could also present an opportunity for professional investors. This statement is valid, as exemplified by the COVID-19 pandemic. While some people experienced significant losses, others like Elon Musk gained substantially, and he eventually became the wealthiest person globally, surpassing Amazon billionaire Jeff Bezos. Born in 1971, Burry started his career as a neurology resident at Stanford Hospital before transitioning to hedge fund management, where he specialized in investing in distressed companies with significant potential for value appreciation. During his time in the investment world, he witnessed the adverse effects of the 2000 dot-com bubble burst and the 9/11 terrorist attacks that resulted in significant economic damage in the United States, which was already in a moderate recession. Recently, Burry has been vocal about his predictions of an impending epic crash in the stock market, crypto market, and other assets. However, the question remains, how soon will this happen? Do you share Burry's bold claims, or do you have a different opinion? Please share your thoughts in the comments section, and do remember to subscribe to this channel for more investment-related videos in the days to come. Burry's latest claims are not without precedent. He has made similar predictions in the past that have come to fruition. However, we certainly do not want history to repeat itself, given the potential consequences to the overall economy. In the year 2000, Burry shut down his website where he had provided investment advice to the public. He then went on to found his hedge fund, Cyan Capital, which within 4 years was managing an impressive $600 million. The success was so substantial that he had to turn away new clients to maintain focus on his existing investments. Burry was a man who always had a fervent desire to establish his investment firm. To fulfill this dream, he put in a lot of effort and studied extensively, which greatly aided him in making astute investment decisions. Owing to Burry's remarkable acumen in investment, he could sense the looming danger and change his investment strategy accordingly. This quality attracted more people to invest with him, and he gained their trust through his wise investment decisions. However, when Burry decided to short the market after analyzing the instability of subprime mortgages and related bonds, some of his clients were displeased and withdrew their invested capital. But Burry's foresight paid off in the long run, and he reaped immense profits along with the investors who put their faith in him. This episode highlights the fact that sometimes taking risks that others don't believe in can be a transformative experience. Burry has become a household name with a wide following on social media. His accurate predictions have garnered him immense popularity, and his fans are always eager to stay updated with his latest insights. Michael Burry is a shining example of the significance of diligent research and analysis. His astute market analysis and careful planning paid off big time in the subprime mortgage market. Burry's recent tweet deletion in September about the potential crash of the crypto and meme markets serves as a reminder of the importance of being vigilant and reevaluating one's investment choices. While the current economic situation might not seem dire, recent events suggest otherwise. The S&P 500 index has taken a sharp nosedive, and caution is crucial. To protect your investments from the market downturn, Investing in companies that are less susceptible to market fluctuations is a wise decision. Additionally, diversifying your portfolio by investing in a variety of assets such as bonds, real estate, and cash can help mitigate risk. The 2008 market crash was not the end of an era but rather a minor setback. The market is always volatile, and there will undoubtedly be many more booms and busts in the future. Bitcoin's value has plummeted by 66% from its high in November 2021, making Burry's prediction of a severe decline all the more plausible. In light of this, it is essential to exercise caution and not put all your eggs in one basket. Stay diversified and safeguard your investments to avoid significant losses. Burry has expressed concern about several factors that could lead to a significant market correction. Among these factors are inflated asset prices, high levels of debt, and investor complacency. Burry cautions that the next market crash may arrive sooner than anticipated and advises people to prepare for it accordingly. He likened the current economic situation to the levels seen in December 2007, which he perceives to be a cause for concern. To illustrate the potential market downturn, Burry compared it to an overcrowded theater with limited exit options. As investors scramble to leave the market, they may either get crushed by others trying to exit or get trampled on in the process. In response to the recent surge of the US dollar, some countries have taken measures to curb its increase against their currencies. These measures include selling dollars and buying their currency in the foreign exchange market, allowing their currency to float more freely, and raising interest rates to make their currency more attractive to investors. For instance, the pound recently experienced a record low against the US dollar not seen since February 26, 1985. Greg Jensen, the chief investor of Bridgewater Associates, is among the economists who support Burry's assertion regarding the imminent market crash. Jensen argues that reverting to pre-pandemic prices is highly unlikely in the current economic climate. Burry's perspective is that the market has not yet bottomed out, and if it continues on this trajectory, it could result in a more severe crash than the Great Depression. The recent crypto crash, which began in May, was the result of a perfect storm of factors, including COVID-19 recovery, high inflation rates, the Terra Luna crash, the Russian-Ukraine war, and supply chain issues, leading to a decline in demand and a subsequent drop in prices of crypto. The situation was made worse by the fact that many investors had heavily invested in crypto, hoping to make a quick profit. When prices began to fall, panic selling ensued, exacerbating the decline. So, what does this market crash mean? Essentially, a market crash is a sharp and sudden decline in asset prices, often associated with panic selling. While it can occur in any asset market, it is most commonly associated with the stock market. The crash is typically triggered by an unexpected event that causes investors to lose confidence in the market's prospects, leading to a rapid sell-off. The implications of a market crash are far-reaching, as it can have a ripple effect on the economy. It can lead to a loss of confidence in the financial system, decrease consumer and business spending, and even result in business closures and job losses. When a bubble bursts, the asset's value plummets, causing economic turmoil. Investors are often the hardest hit in this scenario, as they have a significant amount of money invested in the devalued asset. It's important to note that the effects of a financial bubble burst can extend beyond just investors. The subsequent economic recession can result in job losses, wage reductions, and decreased overall spending, impacting non-investors as well. The ending of the movie The Big Short, where Michael Burry states that he is solely focused on water, may seem puzzling at first, but it serves as a reminder of what Burry has been up to and how his trading methods can be applied by others. Water has recently entered the trading market alongside commodities such as oil and gold, and it's crucial to act quickly and take advantage of this new opportunity before it's too late. As Benjamin Franklin, one of the United States founding fathers, once said, "When the well is dry, we know the worth of water." Burry's warnings about the upcoming financial crisis should be taken seriously, given his past success in predicting major market movements, including the housing market crash. He is now cautioning that the next crash will be even more significant and investors must be adequately prepared. If you have any additional thoughts or comments on the topic, we would love to hear them in the comments section below. Remember to hit that like button and subscribe to our channel for more insightful videos like this. Thank you for watching.